The internet is buzzing with bold headlines claiming that Elon Musk has invested $104 billion in XRP, but is there any truth to this jaw-dropping claim? Spoiler alert, not quite. Let's break it down. In recent days, a viral wave of articles, social media posts, and even AI-generated videos have circulated online, suggesting that Elon Musk, the billionaire CEO of Tesla Space, X, and XAI, has made a record-shattering investment in Ripple's XRP token. Neither Musk nor Ripple has made any public statement supporting these claims, and the numbers being thrown around, like the supposed $104 billion figure, appear to be pure fiction. Some posts even go so far as to claim that he plans to use XRP as a foundational currency for a future decentralized financial system. But according to all credible sources, there is no official confirmation or verifiable evidence of such an investment. Some of these posts use altered interviews, fake tweets, or doctored images to give the illusion of authenticity. So where did the rumor come from? Much of the hype appears to have been fueled by clickbait headlines, AI-manipulated content, and speculative videos designed to capitalize on Musk's name and XRP's popularity. In an age of AI-generated content and social media speculation, it's more important than ever to rely on trusted sources and official channels. Just because something is trending doesn't mean it's true. The rumor is unfounded and serves as a reminder that crypto remains a fast-moving space full of both opportunity and misinformation. He famously pushed Dogecoin into the mainstream, briefly accepted Bitcoin for Tesla purchases, and frequently tweets cryptic messages that move markets. But when it comes to XRP, there's no track record of public support, endorsement, or investment from Musk. It's a classic case of misinformation going viral, something that's becoming increasingly common in the crypto space, and ongoing legal developments. The Elon Musk story, in this case, is just noise. That said, it's no secret that Elon Musk has had a long and complicated relationship with crypto. So, what should investors take away from this? First, always verify before you amplify. Second, while XRP continues to make headlines for real reasons, such as expanding partnerships, cross-border payment adoption, to be clear, Elon Musk has not invested $104 billion in XRP. We'll continue to track the real stories that matter and cut through the hype, right here on Cryptozard News Today. Thinking about buying Bitcoin in 2025? You're not alone. With prices hitting new highs and crypto adoption at an all-time peak, more people than ever are looking to enter the world of digital assets. But before you dive in, it's crucial to understand how to buy safely and what to avoid. Let's walk through how to buy Bitcoin in 2025 the right way. Think Coinbase, Binance, Kraken, or Bitstamp. Always access these sites by typing their official URL directly into your browser. Again, only use official payment channels provided directly through the exchange's website or app. If someone messages you with a shortcut, it's a scam. Period. For better protection, consider transferring your BTC to a secure wallet, either a mobile wallet for easy access or a hardware wallet, like Ledger or Trezor for maximum security. Never click on links from ads, random emails, or social media posts, no matter how convincing they look. Step 1. Choose a reputable exchange. There are dozens of platforms out there, but stick to the ones that are fully regulated, well-established, and secure. Next, you'll need to create and verify your account. Most trusted platforms require KYC verification, which means uploading ID and personal information. It might seem like a hassle, but it's there to protect you and prevent fraud. So if you're planning to get started, start safe. Once your account is verified, you can deposit funds using methods like bank transfers, credit, debit cards, or even PayPal on some platforms. If it sounds too good to be true, it is. Always verify, double-check links, and only use official websites and apps. With your funds loaded, you can now buy Bitcoin. But don't just click buy without understanding the basics. Learn about market orders versus limit orders. Understand how fees work. And remember, never invest more than you're willing to lose. Bitcoin is still volatile, and price swings are part of the game. Now here's the most overlooked and most important. Leaving your Bitcoin on an exchange is convenient, but not the safest long-term option. And finally, stay vigilant. Scammers are everywhere in the crypto space, from fake influencers to phishing websites and giveaway hoaxes. The golden rule: to sum it up, use trusted, regulated platforms. Never follow random links. Keep your Bitcoin in a secure wallet and stay smart. Security first. Always. Bitcoin can be an incredible investment tool, but it comes with responsibility. For more tips and updates, stay tuned to Cryptozard News today. We've got your back.
In a significant move for the global crypto landscape, Hong Kong has officially released a new policy roadmap aimed at regulating digital assets and promoting tokenization, marking another bold step in the city's push to become a major international hub for Web3 innovation. According to a detailed report published by CoinDesk, the Hong Kong government is introducing new measures to bring clarity, safety, and structure to the crypto industry, while also encouraging institutions and investors to explore the benefits of tokenized assets. So, what's in this new plan? At the core of the initiative is a balanced approach to regulation. Authorities in Hong Kong want to ensure investor protection and financial stability, but without stifling innovation. The government outlined clear priorities, including supporting stablecoin development, encouraging the growth of security tokens, and developing real-world applications for asset tokenization, such as tokenized bonds, real estate, and equities. Perhaps most importantly, Hong Kong aims to maintain a transparent licensing regime for crypto exchanges, custodians, and related service providers. This is key to rebuilding trust in a market that's been rattled globally by regulatory uncertainty and high-profile collapses. The report also mentions collaboration with international regulators and fintech players, signaling Hong Kong's intention to align with global best practices while staying competitive in the region. Hong Kong's Secretary for Financial Services and the Treasury noted that tokenization could revolutionize traditional finance, making transactions faster, more secure, and more accessible. That's why the city isn't just tolerating crypto, it's actively building infrastructure to support it. This policy update comes amid a broader trend of Asian financial centers embracing blockchain innovation. While some jurisdictions are tightening restrictions, Hong Kong is positioning itself as a regulatory-friendly destination for Web3 entrepreneurial with an emphasis on compliance, safety, and scalability. Of course, the plan isn't without challenges. The city must strike a delicate balance between supporting rapid innovation and enforcing rigorous anti-money laundering and investor protection standards. Still, the message is clear. Hong Kong is going all in on digital assets, and it wants the world to know. We'll continue tracking developments from Hong Kong and other major crypto jurisdictions right here on Cryptozard News today. In a development that's sending shockwaves through the crypto world, BlackRock, the world's largest asset manager, may be preparing a major move in the digital asset space, just as Bitcoin hits a critical price threshold. According to a report from Forbes, market analysts are pointing to what could be a BlackRock-driven catalyst that might significantly impact Bitcoin's trajectory in the coming weeks. With BTC hovering near the $103,000 $105,000 range, some believe this is a key inflection point, and any sudden institutional momentum could tip the scales dramatically. So, what exactly is happening? BlackRock's ongoing involvement in the crypto market has grown steadily since the company's Bitcoin Spot ETF launch, which helped legitimize BTC in the eyes of mainstream investors. But the latest buzz suggests the firm may be preparing to expand its crypto strategy, possibly pushing deeper into Ethereum, altcoins, and tokenized real-world assets. For context, BlackRock has already filed for several digital asset-related ETFs and has continued to build out partnerships with blockchain infrastructure firms. And while the company remains tight-lipped about future moves, unusual activity in institutional flows and ETF-related filings hint that something bigger could be on the horizon. All of this comes at a time when Bitcoin's price is sitting at a technical crossroads. After a period of volatility and profit-taking, BTC has been consolidating around the $105,000 level, with analysts watching closely for either a bullish breakout or a breakdown below key support. If BlackRock makes another bold announcement, it could trigger a fresh wave of institutional buying, just as retail traders begin to re-enter the market. The Forbes report highlights growing speculation that BlackRock is not just supporting crypto from the sidelines, but may soon be a central player in shaping its future. From tokenization platforms to blockchain-based funds, the firm appears to be aligning its massive capital reserves with long-term digital asset infrastructure. But what does this mean for everyday investors? If BlackRock goes all in, It could bring unprecedented credibility, capital, and compliance into the crypto space, potentially opening the doors for other institutional giants to follow. That could fuel not just Bitcoin's price, but also broader adoption of decentralized finance, tokenized securities, and blockchain-based investing. Still, caution is warranted. As always, nothing is confirmed until official announcements are made. Market sentiment is fragile, and sudden shifts, even positive ones, can spark volatility. But one thing's clear: when BlackRock moves, markets pay attention. We'll be watching for any confirmed updates on this developing story and tracking how it affects the crypto landscape right here on Cryptozard News Today. As Americans celebrate Independence Day, there's a different kind of fireworks lighting up the financial world, and it's happening in the crypto markets. Bitcoin is once again commanding global attention, surging ahead while most of the crypto space struggles to keep pace. According to a recent report from Bloomberg, a fresh wave of Bitcoin mania has been ignited, and surprisingly, much of the fuel is coming from one man, Donald Trump. In the weeks leading up to July 4th, Bitcoin has outperformed nearly every major altcoin. While Ethereum, Solana, and others remain relatively flat, BTC has surged past $107,000, capturing headlines and investor sentiment alike. So, what's driving this? Bloomberg analysts point to a political shift in the US, with former President Donald Trump embracing crypto more openly than ever before. In recent campaign appearances and interviews, Trump has touted Bitcoin as a hedge against inflation, government control, and even international financial instability. His administration, in waiting, has hinted at pro-crypto policies, deregulation, and a push to position the US as a global leader in digital assets. This bold political messaging is resonating with a massive swath of retail traders, conservative investors, and even some institutional funds, many of whom view Bitcoin as a symbolic representation of financial independence and resistance to centralized control. On this July 4th, that symbolism seems to be carrying even more weight. But while Bitcoin flies, the rest of the crypto market is showing signs of fatigue. Tokens tied to decentralized apps, gaming, and even once hot meme coins are stagnating. Analysts say investors are consolidating into safe haven digital assets, and in crypto, that still means Bitcoin. The article also notes that Bitcoin's dominance, its share of the total crypto market, is climbing fast, now sitting above 54%, its highest level in over a year. Still, not everyone is convinced this rally is sustainable. Skeptics warn that political cycles are unpredictable, and tying Bitcoin's price action to campaign rhetoric could set the stage for volatility later in the year. But for now, there's no denying the momentum. As the US celebrates freedom and financial independence today, Bitcoin is delivering its own brand of fireworks, backed by politics, sentiment, and a renewed hunger for decentralized wealth. We'll continue monitoring this fast-moving story and bringing you the latest right here on Cryptozard News Today. Happy 4th of July! In a bold strategic shift, BitDigital, the prominent crypto mining and infrastructure company, has announced it will begin building an Ethereum treasury using freshly raised capital to acquire ETH for long-term holdings. According to a recent report by Crypto.news, BitDigital successfully secured funding to expand beyond Bitcoin and invest directly into Ethereum, marking a notable move as more institutional players look to diversify their crypto reserves. So, what does this mean? And why is it important? BitDigital has historically focused on Bitcoin mining, operating in North America with a strong emphasis on sustainable energy. But now, the firm is turning part of its attention to Ethereum, not just as a network or protocol, but as a strategic asset for treasury reserves, similar to how corporations like Tesla and MicroStrategy hold BTC on their balance sheets. The decision comes as Ethereum continues to gain momentum, following its shift to proof-of-stake and growing dominance in decentralized finance, NFTs, and tokenized assets. BitDigital's leadership believes ETH is now not just a utility token, but a foundational store of value in the broader crypto economy. Their CEO, Sam Tabar, stated that the move reflects a long-term belief in Ethereum's growth and importance in the Web3 ecosystem. The company is also exploring further ETH staking opportunities, which could allow them to generate yield on their holdings over time. This pivot is also a reflection of evolving sentiment in the market. More firms are recognizing that Bitcoin is no longer the only game in town. Ethereum's versatility, active developer community, and massive network usage are making it increasingly attractive as a treasury asset, particularly as it matures post-merge. BitDigital's move could signal a trend where mining and infrastructure companies begin to balance their crypto reserves, with both BTC and ETH representing the two major pillars of today's blockchain economy. However, it's worth noting that this isn't without risk. Ethereum's price remains volatile, and regulatory scrutiny continues to hover over proof-of-stake assets in some jurisdictions. Still, BitDigital's move appears to be a confident bet on the future of Ethereum, not just as technology, but as a financial cornerstone. We'll be watching to see if more companies follow suit, right here on Cryptozard News Today. Bitcoin could be heading toward a historic new all-time high, and it might happen sooner than many expected. According to analysts cited by Crypto News, BTC could reach $116,000 as early as July, fueled by a powerful mix of momentum, institutional demand, and favorable market conditions. After a strong recovery from last week's dip, Bitcoin is now trading just above $105,000, and analysts say the rally may only be getting started. Several factors are contributing to this bullish outlook. First, there's the ongoing ETF boom. Institutional capital continues to pour into Bitcoin through newly approved spot ETFs, with inflows reaching record levels in June. These large purchases are reducing the available supply of Bitcoin on exchanges, which creates upward pressure on the price. Second, macroeconomic trends are aligning with crypto. The U.S. Federal Reserve has kept interest rates stable, inflation appears to be cooling, and investor risk appetite is slowly returning. This environment is ideal for speculative assets like Bitcoin to thrive. Third, historical patterns also back this prediction. Previous bull runs have shown that when Bitcoin breaks above major resistance levels, it tends to move quickly toward new highs. Right now, 110,000 is the key psychological barrier, and a clean break above it could open the door to 116,000 and beyond. But it's not just charts and sentiment driving this forecast. Behind the scenes, Bitcoin mining costs have increased, especially after the most recent halving. With many miners needing BTC to stay above 100,000 to remain profitable, there's a built-in incentive for holders and institutions to support the price at higher levels. At the same time, retail interest is quietly returning. Google searches for how to buy Bitcoin are trending upwards again, and trading volumes on major exchanges are rising steadily. Still, analysts warn that volatility remains high. Any sudden macroeconomic shift or negative regulatory news could derail the rally, at least temporarily. But for now, the trend is clear. Bitcoin is showing strength, and many believe July could mark the next major leg up in the crypto bull cycle. If BTC does hit a new all-time high this month, it would not only validate the recent wave of institutional support, but also trigger global media attention, drawing in new retail investors and potentially launching a new phase of market growth. We'll be watching the charts and headlines closely as July unfolds, right here on Cryptozard News Today.